morning, everybody. Welcome back to another pre-market live stream here with the Everyday Growth Advisors on a Wednesday. Hope you guys are having a good one, and looks like everything that we so far spoke about has been banger head on. Not sure how many of you have been watching the stream for the past couple of weeks. We've been kind of pretty much nailing this play-by-play here. Nice little liquidity sweep in the 422 4950, back up as I was talking about a possible incoming bounce. We cleared 5015, we cleared 5055, and now we are back in the dual zone, which is the 5083 5115 we were talking about in the previous session as the potential rejection zone back down. So that's kind of where we're at. If you have been following the stream for a while, and if you have been kind of following along with all the sector rotations, XLU utilities, which we've been talking about for a couple of weeks, also started breaking out here. And so let's run through all of the things that are going on here. You can see Bitcoin is also kind of still stagnated sideways after the halving event, and still in this bull flag setup. Right, you can see that this is still in a very simple bull flag. With SPX, the macro environment has not changed. Looking at the 10-year yield, still climbing higher here after a brief pause, and has the possibility to break up from 4.698. If it does, then it's heading up into the 4.8 region, which is where you'll see more pain for equities in the coming weeks, right? Now, one thing that can happen with the SPX here is it goes a bit lower to 5055, finds a bit of demand, and then goes to shoot up all the way into past 5155, all the way to 5150. And this move that it makes could be a result of strong earnings from Microsoft and Apple, which are going to come within the next week. Okay, so this is something that you have to be aware of. Now, next Monday is the 29th, and I will not be holding live stream on this day, but I will try to do a recorded session to upload it, so you guys will have a recorded session. I will be in Indonesia attending my friend's wedding in Bali. And then on Wednesday, I'll be back, so I'll be able to hold the live session on Wednesday itself. Okay, so just keeping you guys updated that I'll probably post a video about market updates on Monday, so you guys have an update. If not, I'll post a short blurb on Discord. Either way, whichever way I do it, I will put out a update for Monday's session based on how much time I have. So now, with SPX, as I was saying, now that this upward wave is completed into the 5083 all the way to 5115, which is this zone here, there are a couple of things that can happen. The first thing that can happen is you have a pullback into 5055 or a pullback into 515, and these both become bounce areas for another leg up. Okay, that's the bullish scenario. We need a pullback with the bounce in order to confirm a bullish move higher. And that bullish move can meet resistance at 5115. That's the first area. And the second is 5150. So these will both act as resistance areas for potential pullback levels eventually. If SPX breaks above 5150, you have to be extremely cautious in this area for a potential fake out. Okay, we could have a potential fake out that leads to a pull down, draw on liquidity in this area that will create more problems for the future. Okay, so my upside scenario for that is either bounce 5055, bounce 5015 with a strong rally or strong momentum to the upside. That's going to be dependent heavily on earnings. It's going to be dependent on a lot of news items that will be coming out next couple of days. And through next week. Okay, we have, don't forget that this week and next week are the biggest earnings that will be posted. Okay, so that's where I have my bullish case. Now the bearish case is really simple. Either reject 5085 or try and rally into 5115 for a potential rejection at any one of these cases. If we get up as far as 5150, then that would lead to a bigger fall later on. But this wave seems to have completed. And it looks like this 1, 2, 3 wave is now entering the 4th wave, which will lead somewhere to down here, followed by another 5th wave to the upside. So this 5-wave cycle for the upside has not been completed yet. This is the reason why I say there is potential for their upside. But once again, this is all for entertainment purpose. We're drawing this all just to, you know, entertain ourselves. If you actually look on the 1 hour, you can see a very clear trend line being established here. And that may mean that we bounce down here or bounce down here for a potential fake out and then a rise back up. So either way, you have to play this pivot to pivot here for day trades or scalps. There is no point trying to swing this until you reach 5150 or until you bounce 5015 or 5055. Okay, these levels are going to be the strong levels. Okay, so that's for SPX/SPY. Now NASDAQ, on the other hand, this one has had multiple days of selling. By the way, hedge funds bought the dip on tech and on the SPX in general. Now, if you look at NASDAQ, not that strong of a bounce yet. And the bounce here is overall mostly just a corrective bounce, right? Just a corrective bounce here. And so with NASDAQ, we need a retest of 17,840, 17,830, or 17,800, let's just call it. And if we get that would be my bearish cue to take a short position if we can reject in this area. For a bullish setup, I don't like it. I don't like the upside because you pay the long from here, your risk to reward ratio is not that great. It's like almost a 1:1. I don't really like that setup so much. And then remember, you have all of this like weird downside. That's not really a vibe. So the downside action is definitely more you know, educatedly bet on when we get a rally to the upside. We need some liquidity engineering on this side. And after we've seen that is when we can short NASDAQ. Okay, so far, the bearish thesis still continues. For those of you that missed Monday's session, this thesis was predicated on the idea that the 10-year yield in the past has made the same rise, and now it's trying to do it again. And the last time that happened, you know, we had a big correction zone within the S&P 500, which lasted a couple of months and was for a total of about 10%, right? And if you look at where we are right now, right, in terms of correction, we are currently sitting at about 6%. So if we were to go for a 10%, what would that look like? A 10% would look like, oh, bingo, right in the dual zone, which is right below us, which is right here, right? So that would mean that a wave like this, 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 and eventually coming down by July or so, before the elections, right, into this area where we would see the S&P 500 extend into, clear out some liquidity down here, and then set up for the next secular trend bull wave. Okay, so that's kind of where my head is at right now in terms of where I'm looking at this market. And obviously, this is all just for entertainment purpose, right? This is all just predictions, which don't really matter. At the end of the day, it's the price that will do the talking, and we will be trading the price. We're not really going to be looking at our fancy mumbo jumbo lines that are not really going to tell us a story. Now, and I'm being very honest and crude about that because that's just the reality of the situation, right? You can go and draw as many lines as you want, but at the end of the day, what matters in the market is price, and that's all the market cares about. Now, IWM, small mid caps, actually did pretty well, right? If you think about it, amidst that sell-off from the high that it made, right, to where it is currently, it's only down, yeah, about 6%, the same as the S&P 500. I would have expected this to fall more because of its sensitivity towards rising interest rates, but it's been a pretty overall strong sector, right? And this bounce here, if it can hold above this, you know, $200 level, which I have mentioned before, would make a lot of sense for continuation on upside eventually. But right now, this sector is going to be spooked. So I expect sideways movement on IWM until we get further confirmation. 10-year yield, I already discussed this. And then comes the dollar, which has now entered the eye of the storm from this previous level here. And the dollar obviously is one of the things right now that have been putting a lot of pressure on equity prices. But it's going to start to get better because I think that there's only so much appetite for the dollar in a short window of time, especially when commodities are pricing things up as well. The VIX briefly came up to 21 bucks. I managed to sell majority of my position. Closed the VIX on Monday. Wait, was it Monday? Sorry, last Thursday is when I closed it for 20%, 21%, 25% for these hedges, which made up a total of about $1,500. Last week's trading yielded about close to $10,000. So that puts my yearly P&L at $27,000. And it's a slow grind, right? It's a slow grind. I haven't increased risk. I haven't, done any of that funny stuff. I've just been playing slow ball, low ball trading sizes here because I want to build a good bankroll in the beginning part of the year so that I can use that bankroll to kind of really snowball towards the mid and the next half of the year, right? Let's go back to sectors real quick. As I had mentioned on Monday's live stream, energy was still looking bullish, but it has not given a bounce that I truly wanted. Financials was the other bullish one. Healthcare, we were looking at a potential bullish bounce. And then I spoke about consumer staples being a very messy one because it had rejected and potentially using this as a rejection level. Discretionary stocks are obviously rallying today. You have Tesla, which is up close to, 11%, which we'll talk about in a second here. And then you have materials, which are still in the free fall, industrials, which are barely recovering, communications, which is still in not really good area, real estate, which sold off, and we spoke about this before, as well as utilities, which is now kind of starting to break out. And, we've seen some of that in some of the tickers that we're trading. NEE was one of them. I called this out like 2 weeks ago when it was starting to approach this resistance. It faked out, came back down. I was still holding the long position. And yesterday it finally broke out. So we'll see how much this can push to the upside, right? Now, let's talk about a couple of different things. First of all, DDOG, one of the ticker symbols that I've been watching for the past couple of weeks, has been consolidating above its previous support and hasn't really been able to break out just yet. But yesterday it made a big run for 131 and I unfortunately missed this. And then it came back down. Now, its earnings are on 7th May, which means next week, right? Next week? No, the week after, on Tuesday. I would be happy to play a run-up play on this one, potentially. Visa is the other one. And Visa is up pre-market here about 2.5%. It had good earnings, I'm going to guess. So this is doing pretty nicely pre-market. And then you have Zoom. This is another setup that I really like. Check this out. Multiple time bounces on the demand zone or dual zone, whichever this is. This is the 4th time it's bouncing on this. And has the potential to make a deep run back up all the way, right? So from a risk-reward ratio standpoint, this is a very easy risk-off trade. Let's say you take, $2, $3 or $4 even risk off. There is a lot of upside here, almost $8, $9 upside, even $10 upside if it goes back all the way to 72. But you're going to have to buy time on this because this takes anywhere between 1 to 2 months to play out on average, right? So whatever you're playing on Zoom, you better give it at least 2 to 3 months, I would say, between these time intervals for the swing to actually work out, right? Net. This was the trade from last week, which played out. It broke down the key pivot, rejected, beautiful sell-off, and then rebounded yesterday, and today is a bit higher, 1.2%. Looking for, once again, this to run higher or reject here for the downside, right? And then semis are in its own world. And then the other one was LMT, right? We spoke about this one as well, right? And this one had a lot of chatter behind the probability of its contracts being gifted to it. I took profits right when it rallied because I knew some bullshit like that was going to happen, right? So LMT, I haven't noted it down yet, but I have it in my broker statement, so I'm going to fill it up later. But as it broke up yesterday, you can see I had already signaled to everybody that I'm exiting this trade. it was initially up about 40%. I took some profits on it on that level, and then I took another half of the position and closed it out. So you can see that here there was a 40% profit on LMT roughly, and then it fully closed out after that. So that was a nice little win. Let's see what else. Boeing, this was another one. I guess it did pretty decently for earnings today. So this is going to be one of those that might see a pop. I have some calls on this. And yeah, so that's mostly all I have in terms of the important tickers that I want to cover. Netflix, if it gets above 580, it appears to have room to run, possibly 600. What are your thoughts, though? I think you might be thinking about the gap fill, right? Personally, I don't like it. I don't like that setup. In fact, I would like to wait for it to come back up so I can short it rather than playing the upside here. This gap up here was, what kind of a gap? It was a breakaway gap, right? And this gap here is more of a exhaustion gap after earnings too, right? So I don't like the setup to the upside right now. Even if it gets up to close the gap at 600, I'm more interested to take the short on it than I am interested to go long on this, because the risk to reward ratio will not be right. If I were to go long here, right, and I were to put my stop loss right where it goes there, your risk to reward ratio is like 0.77, unless you're going to tell me you're going to move your stop loss all the way up here and then play this. This is not really you know, a scenario which I would see happening. That's all. Tesla. Yes, I know you guys are itching about Tesla. So Tesla, all the way back down to 139. I told you guys last week, right? During Monday's live stream, I told you guys, when was that? Like here, when Monday it opened up at 140 here. I told you guys, buy the freaking dip if you haven't bought this stock in your long term, right? There's a reason why I've been saying that, because the market's gone bonkers trying to discount the stock, right? And it's a very simple case. So let's go through Tesla real quick. From the technical perspective, it found a little demand zone and it bounced right on it. Obviously, earnings came out as well. Now, it didn't do good on earnings, but it was what was said during the earnings call that really mattered. So what was mentioned? Let's have a look at the Q1 update, okay? So Tesla's Q1 update. Now, there are a couple of pressing things in here, and then there are a couple of, you know, kind of nonchalant things in here. But right before I continue, if you could take a second out of your day and smash the like button, I would truly appreciate it. So this video can reach a greater number of traders on a weekly basis so that we can help more people pre-market. So if you could just, you know, take a second out of your day and hit the like, it would truly do us wonders in trying to help more people. Thank you. So go back to Tesla, you know, earnings report. So have a look at this. 1.2 billion GAAP operating income. That means that their income before operational expenses was 1.2 billion. And then their net income after operating expenses was 1.1 billion. But then if you take the non-GAAP version, it's 1.5. So this is like, let's just say this is Tesla Fairyland numbers, and this is actual proper numbers, right? Now, apparently, according to Tesla investor relation team, they're saying that we experienced numerous challenges in Q1, from the Red Sea conflict and the arson attack on Giga Berlin factory, to the gradual ramp-up of Model 3 in Fremont, excluding Cybertruck and unscheduled downtime. Our cost of goods sold per unit declined sequentially, driven primarily by lower raw material cost. Now, when you start off with the opening statement like this, that means that your cost of goods sold, your raw material cost went down. That's a good thing, right? You would think. And then they go on to say that global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. While positive for our regulatory credits business, we prefer the industry to continue pushing EV adoption, which is in line with our mission. As you guys know, Tesla only cares that people are more engaged with buying more Teslas, right? Because they want everyone to be electrified. To support our growth, we've been increasing awareness and expanding vehicle financing programs. In other words, making it easy to borrow money, including attractive leasing terms for our customers. They said it themselves, right? While many are pulling back on their investments, we are investing in future growth, including our AI infrastructure, production capacity, our supercharger and service networks, and new infrastructure. With $2.8 billion of capital expenditures in Q1. So CapEx itself was 2.8 billion, which is wild, okay? We recently undertook a cost-cutting exercise to increase operational efficiencies. We also remain committed to company-wide cost reduction, including reducing costs per vehicle. Ultimately, we are focused on profitable growth, including by leveraging existing factories to produce production lines to increase new and more affordable products. Blah, 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 blah. This is the bit that is really important here, I feel. But we believe in scale autonomy is only possible with data from millions of vehicles and immense AI training cluster. We have and continue to expand both. To make FSD supervised more accessible, we reduced the price of subscription to $99 a month and the purchase price to $8,000 in the US. Okay. Now, operating cash flow was 0.2 billion. Free cash flow was negative 2.5 billion. This is worrying to me. Okay. Remember, I'm not going to just glorify everything about the earnings report. I'm here to give you both sides of the coin here. So one thing that really worries me here is the negative cash flow, free cash flow, which they went into this year, into this quarter, sorry. And if we look at the stuff, so you can see increased AI training compute by more than 130%. They installed almost, I think, they have installed 80,000 H100 GPU chips from NVDA in their backend, and then record energy storage deployment 4.1 gigawatt hours. This is their solar city thing. Produce over 1,000 Cybertrucks in a single week in April. Okay, cool. Let's have a look at their financials. Now, for those of you that don't know, Tesla does its own financial summary, and it's done in their own way. So this is not your traditional income statement, balance sheet, blah, 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 blah. This is like everything rolled into one kind of. So total automotive revenues, you're comparing this number in this column to this number in this column because you are looking at the year-over-year change. So Q1, you compare with Q1, right? So this column and this column, okay. Automotive revenues are down 13%. Energy generation storage is up 7%. Service and other revenue is up 25%. Now, keep your eyes on this number in the next few earnings calls, especially in the next few times that you see in the next Tesla reports. The service revenue is what I'm really interested to see if it starts growing. Because this is, and remember, these are all in millions. So your service revenue is already starting to come up to $2 billion, right? That's quite a lot in service revenue, right? And then you had total revenues, 21 billion, total gross profit, 3 billion, 3.6 billion, and then GAAP gross margin was 17%. So the margin is down by about 1.9%, yep, about 2%, right? You can see 19.3 goes down to 17.4. Remember, BP stands for basis points, and 100 basis points is equals to 1%. Okay, so when you say 199 basis points, this means minus 2%. Okay, learn how to read these. Operating expenses went from 1.8 billion to 2.5 billion, a 37% increase. Income from operations is down 56%. So this is where they really got hit, right? And why did they get hit here? Because they lowered the price of their goods. Operating margin is down massive 5%, okay, as a result. So their margin for the car went down by 5%. That is the result of lowering prices. Did it increase revenue substantially? It didn't. Revenue is down 13%. So their pricing model is not exactly working right now. Okay, that's what you need to know. If your pricing model worked, what would happen? Does anybody know what would happen? If, let's say, you lowered the price of something and you're expecting good results, that would mean that it would result in higher revenues. Never mind if your margin went down, right? But it should result in higher revenues, which is not what happened. So they had some issues with manufacturing. They had some issues with CapEx. they had some issues with investments that they needed to sort out, and that's why the reason why this quarter kind of sucked. Okay, you can see these numbers, they all tell a story. You need to be able to read what the story is, and so that's what I'm trying to help you kind of simplify this. If this is helpful for you, and you want me to do these more often, feel free to tell me in the comments right now, in the chat, so that I know if you want me to do more of these. Maybe some of you missed me doing some of these, and I'd like to know. So then you have net income, and that's down 55% from a year ago. And that's obviously because of the EBITDA and your margin that got compressed. And then you have, this part's not really that important, net cash provided by operating activities, obviously would be much lower. CapEx up 34%, free cash flow down massively as a result. Okay, so now, is the company in terrible shape? No. Tesla still has $26 billion, right, in cash and cash equivalents, $27 billion. So one quarter, a mistake is not that bad. What did that quarter cost them in terms of FCX? Sorry, in terms of FCF, free cash flow, that made up about 10% of their existing cash position. So they kind of fumbled 10% risk in this trade-off, okay? Which is not a bad trade. I mean, there were upside potential. Now, other things that they're talking about here, which is important, is FX things, or the rate of FX impact was 0.2 billion. That's a lot, 200 million, right? And then, so you can see operating income decreased. Same thing here, reduced vehicle ASP due to mix. And then cost of Cybertruck, decline in vehicle deliveries due to the Model 3 update in Fremont factory and Giga Berlin production disruptions, low cost vehicle, blah, 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 blah. Okay, that's all cool. You can see, you can go and look at what cars and all that BS were produced and delivered. Not really my cup of tea to go and geek out on this particular part, because I only care about what was presented above, to be honest. What they sell in order to get there is not really my concern, in my opinion. Like, as an investor, I don't really care about that. But it is nice to see that their storage is still growing, which is a good one, right? Okay, now, and also supercharger stations grew by 26% year over year, which is also nice to know, right? So that's a good one. Okay, now there's other stuff here. They talk about vehicle capacity. You can read this on your own time. Go to investorrelations.tesla. And then there's core technology. They talk about artificial intelligence software and hardware. The amount that has been trained on billions of miles of real world data. And they go on about all this. I really feel this is where Tesla's value is, right? It's the FSD and AI that it uses behind everything. And then it goes into energy generation, storage, cash profit, blah, 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 product. And then they go into their ecosystem. And this is what people don't understand about Tesla. Just look at how webbed this production of their ecosystem is, right? You have not just the vehicles, which is a small portion. You have insurance. You have the ride hailing, which is about to come on. FSD, AI computer, you have an auto bidder, energy storage, solar, charging, lithium refining, battery cells, service and collision, and now finally humanoid robots, which they're releasing, right? So there's a lot of revenue streams that they're building out of one specific thing. And then obviously they put in some pictures here, blah, blah, blah. I don't really care about all this. This is a look in the preview of the ride-hailing Tesla app if the robotaxi goes live. So it's a kind of like summon a car, and then they'll tell you, oh, your Model Y is 3 minutes away. Here's the ambient temperature inside your car, so your butthole is, you know, properly aired. And then the interior climate, whatever. Your car's arriving, blah, 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 blah. I don't really care much about this, to be honest. What is this? Dojo training cluster. Is this their CPU stack or something, or GPU stack? I have no idea what the heck that is. A mega pack. This is apparently plus power capillary energy storage facility. Okay, that's nice to see. Tesla Semi, start of construction near Gigafactory, Nevada. So they're building a new area here in Nevada that is going to be solely for the purpose of semi production. That's something else that's happening. Cost range, squeezing or penny out of vehicle cost. So this is what one vehicle cost. And then key metrics. Okay, cool. Now, one thing to understand here about Tesla is, you know, 1 quarter is not going to dictate its entire performance. Okay, and so obviously there's going to be up and downs with quarters for companies that are performing to this level of leverage. Now, I'm obviously going to do an intrinsic valuation of this business once again, and I'll be posting it on the Discord for all the members to look at it. So feel free to, you know, join up the community. Link is in the bio down below in the description. You can join. Yeah, that's all I kind of have for you guys. Let me see what other questions there are. This is great, very much. Thank you. No problem. PayPal. Okay, PayPal. 70 call for earnings on 30th April, May, first week expiry, expecting earnings to be better. Earnings, I wouldn't try to guess whether it's going to go up or down, can go either way. So I think what you're asking me is whether you should play PayPal for earnings. And my answer to that is it's literally going to be a 50-50 split. So whichever way you think that you want to play it is good for you. I mean, I don't think it's a bad idea unless you know, are taking too much risk on it. So far, obviously, we had the plan was 65.90 rejection, and then there was a bounce for 65.90 as well, and none of these worked out so far. So I think if it rejects at 66 or 65 again, then it's going to go further lower to kind of complete this wave pattern. Right, that's what I'm looking at. What's an auto bidder that Tesla makes? Good question. Go find out. I really don't know. I just saw it on the slide right now, and I'm like, oh wow, that's cool. Might be something to do with their robotaxi, I guess, or something else. I don't know. But anyway, there was a whole bunch of Tesla news that came out. You know, things that were on the ER, like, you know, there's going to be a low-cost vehicle produced probably in late 2024, early 2025, referred to as robotaxi, a cybercab. This is how many GPUs they did. This is how many people they were laid off. Their battery production has increased by 20%. Optimus, which is the robot, is able to complete factory tasks in the lab, and they want it to be, you know, sold by 2025. But we know that Elon has really given some lofty you know, timelines in the past, and he barely makes it to those timelines. It's kind of like more of like a gyration. But for PayPal, I don't really have much to add for you. I mean, if that is your plan, just stick with your plan. If you have a risk-defined way to do it, it's a flip for earnings, unfortunately. Like, I can't give you my view on this because it's literally going to be a flip, coin flip. And with that, that's all I have for you guys today. I hope you have a good session, trading session, and yeah, this was a fun one. I'll try to do more like this in the future if you guys like it. All right, well, if you can, leave a like on your way out, and if not, I'll see y'all on the next one. And remember, I will be probably recording or uploading a video for Monday's live stream. If not, I'll post something on Discord and write a blurb for you guys, depending on how busy I am, obviously. So yeah, I'll see you on the next one, guys. Peace. Thank you, Mark. Appreciate it.